right. Welcome. Thank you. And welcome to another episode of Nurturing Success. Today, I'm thrilled to have a good friend of mine, longtime friend and professional acquaintance, Trevor Hammond. He is a very successful mortgage professional, both as an originator, and he's now, over the last several years, moved into management. He runs a region, runs a branch, and his day-to-day passion is helping really loan professionals figure out how to do better in their business. He loves financial education. And so I thought it'd be fun for us to chat through how we both view the financial planning space. We're both, talking to kind of the same people, but he's an additional to what I'm doing individually. He's working with lots of other loan professionals to help them engage the financial planning audience. So again, typically we're talking to financial planners in our podcast here about what's working for them, but I thought it'd be great to have Trevor and talk about what's working for him and how he kind of views that space. So welcome, Trevor. Thanks
Thank
for being
you,
here.
John. Always good to spend some time with you, my man. We've known each other for 20 years, probably.
It's getting close to 20 years,
Yeah.
and it's great. And we've been pretty engaged at a high level. And what I mean by high level is that, we believe, hopefully we're correct, that we're thought leaders.
Right. We're leading our thoughts somewhere.
Right. And so both of us work with a mentor coach by the name of Todd Ballinger. And he really, at least for me, brought together this idea of the intersection between financial planners and mortgage professionals, right?
Mm-hmm.
And so how these things work together and the balance sheet, and he calls it crossing the balance sheet. And so that's kind of where we first came together. Yeah. Right.
Yeah. I mean, we're in a world, a mortgage world where everyone is trained to just focus on real estate agents, and they're
Yeah.
all just clamoring to go work with real estate agents. And along comes Todd Ballinger, which I'd already seen a little bit of that path. And man, he solidified it. He had kind of packaged up how to really approach and be more valuable to the financial planning world. And that's probably what both you and I just fell in love with many moons ago. And to the point that now I look back and I'm happily telling any of my lending friends who care to know that if I was to start all over again in this business,
Mm-hmm.
that's all I would do. I would only work with financial planning professionals. Knowing what you and I know about their
Love
business
that.
and how we can bring that kind of value, I can't not see it that way nowadays.
No, I agree. And we will definitely dive into that a little bit more. But before we go into all that, I always like to ask you and start these conversations with gratitude. So, Trevor, what are you grateful for today?
Today,
Right now, what are you
right
grateful
now,
for?
dude. I'd say the first thing that comes to my mind is honestly my health and my body today.
Nice.
Always grateful for my family, the health of my family, and my team, and everybody that helps me, be able to have the impact I get to have. But I am really on this kick. I've just played sports my whole life up until I still play. I've just shifted to tennis and pickleball a lot, but soccer since I was 6 years old up until just a year ago, basketball up until 6 months ago. And my body was hurting, man. I mean, just beat up. I'm 52. My body's hurting. And I had to keep trying something new, which, me, I'm always like my own best experiment.
Mm-hmm.
And new yoga is not new, but I said, you know what? I'm going to dive into yoga. It's something I haven't tried. I'd seen chiropractors. I'd seen everybody. And so I've been doing yoga almost every day for about 6 weeks, maybe 8 weeks now,
Good for
including
you.
this morning.
Yeah.
And I just said yes to playing soccer again this fall with my old
Nice.
team. Just feeling better. My body feels stronger, more balanced. So new convert, addition to strength training and the other things we all know we need to do. Man, yoga has done some things 52 years in, didn't know.
Good for you.
So,
Well, that's great. Well, okay, maybe we'll stick there for a moment. What I hope to get out of, the conversations I have in our podcast is, words of advice for, typically as financial planners, but it's really all professionals, right? And
yeah.
so ideally, some of the folks that might listen to this will be, financial advisors, but it might also be mortgage professionals. And so we talked just before we jumped on about the morning routine,
Hmm.
right? So, I
Yeah.
mean, and I think, and I believe, and I know you believe the same thing, that the way you set up your day has everything to do with your success. We don't have to worry about yesterday. We can only control what's right in front of us today.
Right.
So tell me, what's your morning routine? What do you do?
I mean, I'll be truly honest and transparent. It's always a moving target. Like I have
Mhm.
certain fundamentals I've always, for many, many years, read. I read every day. I mean, you and I have a lot of the same books, but the reading part is become my non-negotiable. Like when I don't spend even 10 or 15 minutes in the morning reading some kind of nonfiction, like
Mhm.
growth, marketing, sales, business development, something that kind of spurs my creativity.
Yeah.
Um, it's not the same. I gotta say, I've clearly seen that I'm just more boring throughout the day. Like just reading a little bit. Honestly,
That's
this
great.
I'm back to this book today.
Oh, okay.
Just today.
I've actually not read that. I
Oh,
know the book, but I've
this is
not read
probably
it.
my fourth time reading this book,
Great.
and I'm
That's a
starting
good
from the
deal.
very beginning again. I'm reading through it slow again. I have it on Audible. So for anybody that hasn't read that book that's in business, I highly
What,
recommend it.
and for those who don't watch this, what's the name of the book again?
It's called The
Just pop it back.
Road Less Stupid by
Yes.
Keith J. Cunningham.
Less.
Um,
I love that.
it's in
Okay.
your face. It's all the
Yep.
mistakes that we make as business owners. But anyway, reading. Um, uh, I've struggled with meditation, but I try it,
Mhm.
and then I work out,
Mhm.
and then yoga. Now,
Yeah. Yoga.
yoga
Love it.
is just like, man, it fits so well. So today, for example, 20 minutes of yoga, 20 minutes of strength training, 20 minutes of reading. Those are my
And the
morning
yoga
day.
and the strength, is that stuff you're doing at home? You have kind of a home
Yeah, I've
gym or
set up a
space?
home office.
Okay, great.
It just
You're
makes
watching
it happen.
videos, or are you watching a video or podcast or streaming? How are you doing the yoga?
I have the Peloton app
Okay.
on my iPad. We had the bike, back when everybody bought the
Yeah.
bike. I have the app for whatever, $13 a month. It has all of my
Yeah.
strength training trainers, yoga. It's got Pilates if you want to do that. It's
Yeah.
got outdoor events. It is basically my all-in-one trainer I take with me on the road when I'm traveling. I literally did yoga in my hotel in San Antonio
Nice.
for both days I was down there. Like, just I
Right.
have to do it now. And so, if you have your
Yeah.
iPad, you're good to go, even if there's a gym on site.
Sure. Love it. Good for you. Well, that sounds a great
And
routine.
two
Yeah,
cups of
mine's
coffee every day. 2 cups of coffee,
2 cups of
and
coffee.
now Laird's creamer with
Oh, I've heard of Laird. I've not.
Laird's
Yeah, I've heard of Laird
creamer with
Creamer.
functional mushrooms in them. Yes,
Look at you.
the healthy
You and Tim Ferriss
legal
are crazy.
mushrooms.
You and Tim Ferriss. Look at you.
Oh yeah, yeah, yeah. Love me some Tim.
I was actually talking to somebody yesterday about the oh gosh, what's the coffee with the butter?
Oh,
Uh,
bulletproof coffee. I think.
Bulletproof coffee,
Yeah,
right? So, which I kind of forgotten about, but I
yeah.
was pretty religiously into the coffee with the the butter, the grass
Big old
fed
stick of
organic
butter.
butter,
Yeah,
and the MCT
yeah,
oil and so
yeah,
forth, all those things are great. I
yeah.
mean, kind of all things in moderation. Well,
Today,
good. Well,
by the
thanks
way,
for
I'll give you one bonus. Today's
yeah,
my
please.
first day. We'll see how I do with you today. I just got my first shipment of X Brain.
Oh,
So if
tell
you want to
us.
check that out, it is just been listening to a bunch of folks that are, similar ages, 40s or
Yep,
50s, and they're
yep,
really working on natural ways to get your brain fired up in the right ways. So that's the same reason you have the mushroom component in some of these
yeah,
coffees and
yeah.
creamers. I'll let you know how it goes, but go look up X Brain. It comes highly recommended. It's all natural. We'll see. We'll see
Good.
how I am
Well,
after a couple weeks.
I look forward to hearing the
Might
report
talk
back.
twice as fast, next time I see you.
That's right. Well, you'll do you want to go forward with you? I guess you want to go backwards with your brain. I don't really know. I guess
Yeah.
the most important part is that you just don't want to lose brain functionality, right?
Right.
You want to
Right.
keep
Right.
developing and learning
Yeah. Yeah.
and all the rest of it, right? So, because I got to admit, I'm a little bit older than you. I'm 60, and I can tell that things are just a little bit not quite as tight and as sharp as they
Hmm.
were
Yeah.
before, which is why I think I like doing these kinds of things. and
Yep.
engaging with the world,
Yeah.
and so forth. And you learn, right? You're constantly learning.
We have to
So
keep
well,
trying
thank
new
you for sharing.
things, learning new things, the
Yeah,
neuroplasticity of our brains. We've got to
absolutely.
keep that going for sure.
So let's talk about this intersection of mortgage planning and financial planning.
Mhm.
So kind of when did the light, I know we talked a little bit about Todd Ballinger and that kind of went on, but you were kind of already doing that in your individual mortgage practice, right? So when did you realize that sort of working with financial planners was important? And then well, it's okay. Answer that question. We'll go to do another topic. So go for it.
I mean, first, it was pretty early on. I was a young pup when I got into this business, fell into it like everybody does, and knew I loved it right away just because the entrepreneurial aspect of it, right? We're in this
Yeah,
business where, wait, the more I can get better at things, there's no limit to what I could earn, right? When you're 25, that's all you care about. I didn't have the family and impact and all that wasn't quite the first thing that comes to mind. It was about, man, how do I make a living for myself?
sure.
And then you get beat up over and over enough by the consumer who just keeps trying to compare your price to everybody else. And you start going, man, there's got to be I don't want a 25, 30-year career of, am I cheap
Yeah,
enough? I mean,
yeah,
something
yeah.
clicked in there. I loved finance. So I started really finding my passion for education. I almost became a teacher. And what a
Mm-hmm.
crazy roundabout way that I am a teacher, actually. I just
Absolutely.
I just
I,
teach in a
yeah,
whole different way and different
that's
people.
right.
Like I still
You're
have
spot
this
on.
dream of being an adjunct professor, and you know, teaching young entrepreneurials, all this stuff, finance. Anyway, I started consuming, everything from the Dave Ramsey's to Rick Edelman's and learning financial education and financial literacy and starting to infuse it into my conversations. And I didn't know how to really package it all up. I hadn't met Todd Ballinger yet. I hadn't really gone even as far as I didn't realize you could go in this business. Um, but you quickly started getting a different response from the consumer, right? They're like, wow, this
Yeah,
is
yeah.
different. And by the end of my meetings, they're asking me if I could help them invest their money. I
Mm-hmm,
was like, whoa,
mm-hmm.
whoa, where did you get that impression? I don't invest
Yeah,
money. I'm not a financial advisor. I'm just helping you with your mortgage. And I believe this is how we should be talking about this. It's not just about rates and fees and down payments and repayments. Um, but it was working. You could quickly see within a short amount of time that talking about how to build a savings plan, talking about how to pay off their debt more effectively, consumer debt,
mm-hmm,
um,
mm-hmm.
the pros and cons of putting all their money down versus just some of it, starting their 401k early at work and IRAs and college savings. My conversion rate was going up.
Yeah,
My
yeah.
stickiness was going up. I was getting more referrals. Well, what happens, that intersection that happened naturally is soon as you have that one person say, man, this makes so much sense. Let me put half this money down and I will
Mm-hmm.
go invest the rest. Like, who should I talk to? And I'm like, it's a good question. I don't
Bing,
know
bing. Yeah,
anybody. I don't
yeah.
have anybody for you. So, right, ding ding ding. I need financial advisors to take it from here because I don't do that part, right? I'm not licensed and I'm not, technically savvy in that part. So I was getting clients all the way up to the water, understanding the concept of different money decisions as it relates to buying a house, refinancing their house, points, no points, all that. But it all fed into, holy cow, I need a few advisors. So I started meeting with them on my own, figuring it out, and just a different ballgame. I
Yeah.
mean, just a different caliber of people you're talking to who thought like I thought about it. Whereas in the real estate community, they're just naturally trained to be very, very transactional. Much of the mortgage industry is very, very transactional by training. I wasn't. I wanted to be very relational and build a book of business. And I was jealous how a financial planner could have a book of business. Right. That's the
Yeah,
other thing
right.
that really attracted me to them. I was really intrigued and curious. Like, man, what would it be like to have residual income someday? Like, we just start our month over every month, and I've only been doing it like probably 4 or 5 years at this point.
Exactly, right.
So I don't know if that answers your question, but
No,
that's kind
that's
of
good.
where
That's
the light bulbs went off.
no, and I can remember back. I had a really similar experience, right? So it was the same kind of thing. Clients started asking me about, advice on, what should I do with my money? Should I
Mhm.
lease my car? Should I buy my car? Should I pay this off, not pay that off, and so forth. and kind of the same kind of thing. And I became their de facto advisor in many cases. And, I don't necessarily think I was qualified for that at the time, but I realized they weren't getting advice anywhere else. And I remember one time, a realtor that I was working with came to me and she said, "Are you a financial advisor?" And I kind of went, "Whoa, whoa, whoa, no," because I felt like she was criticizing me in some way, right? It was kind of a weird feeling, like, well, no. But then I realized it was actually a compliment she was giving me.
Yeah,
She was saying, "You appear to be giving people advice, and that's fine." And so from that point forward, I said, "This is what I do." And then it's kind of the same journey of discovery that you've kind of gone through.
that's great.
Um, and so let me ask, so how do you think the financial planners view most mortgage professionals? What do we think that the folks that are out there helping people make decisions around their money, how do they view mortgage folks? Do you have a sense for it?
I mean, I would answer that with I don't think they are enough.
Yeah.
Period. Um,
Yeah.
if they're thinking about the mortgage community in general at all, they probably have the same perception every consumer has. That it's a bunch of people just trying to sell a big pile of debt so the people can buy the house. We collect our commission, and that's kind of curious. I don't know how you really get paid and what's hidden from me, and is your rate as low as somebody else's, and it's very transactional. I think, unfortunately, that if I'm and speaking in generalities, I think that's
Sure.
what most financial planners think of our industry until we teach them otherwise.
Yeah.
And we are, you and I are in a very small group also, which is
Yeah.
I don't think is good at all for our industry, but our industry is very transactional, unfortunately. And it is
Sure.
people just looking at their job as to sell debt. So I don't I think that's how they look at us now. I mean, I got plenty of ideas on how I think they should see us, but I
Sure.
think until they start thinking about us, none of that's going to matter. Like right now, their perception is probably the same as every consumer.
Yeah. I think that's well said. It is a challenge, and I think you and I spend probably the vast majority of our time trying to help advisors understand the real benefit and power that a good mortgage professional, like the stuff we're
Yeah.
talking about, understanding money, understanding finance, helping clients make better financial decisions, how valuable of an ally that the right mortgage person can really be.
Yeah.
And I know that's your passion and my passion as well, and so forth.
Well,
But
John,
then,
real quick, like, I mean, most of the people I talk to every day are mortgage professionals.
yep.
Um, One of my favorite things to get them to see the light here, because I love training them on how to become more valuable and start partnering with
Mhm.
financial advisors, like you mentioned at the beginning, like you do. I said, imagine you're just starting out in this business and there's two paths you can go, right? There's this one path where everybody you go meet with already has three people like you, and your sell is why are you better than the people they already have in their pocket or the cards they're handing out.
Yeah,
Pretty hard sell because you're like, I don't even know
absolutely.
why I'm better than those people. I just got into business. What? Then you have this other path, right? Where this whole group of people don't have a you at all. And your sell is to help them see how having you as a part of their practice, their business, can greatly improve their success and their experience for their customers and their financial future. No other competition. You just
Hmm.
got to figure out how to get them to see why you'd be so valuable to them. So one's this bloody red ocean, right?
Yeah,
As if you remember that book.
sure. The
And then
book, yeah,
one's a
yeah.
blue ocean still after all these years.
Still,
I've been
right.
doing this for 20 years and it's still a blue ocean. Like, and it doesn't really get them to want to make that big change. I've had a few people want to make that shift, but they gradually dip their toe in. I'm like, man, there are so many financial planners who need what you do.
Yeah, no, I continue to discover it every day, when you do connect with a financial planner, a good financial advisor, as it were, and they realize that we're not there to just get a commission off a transaction from a client, that we're genuinely trying to improve the planning that they're already doing, right? And so, although that brings us to a whole nother point, right? So one of the interesting things about the world of advisors is not everyone's a planner, right? At the end
Mm,
of the day, I mean,
mhm.
so that's a whole different, and we don't need to go into all the different types of different styles of
Yeah.
advisors, but I would say that the vast majority of advisors don't even do truly holistic financial planning,
Yeah.
right? Where they're looking at everything. And I think that's also an improvement that can be made on the other side of the balance sheet, on the asset side, the advisor side, right? And I'm assuming, and maybe I shouldn't assume that, you talk about a handful of books that you've been reading, and I got all my books behind me that I've read over my career, and I go back to some of them. Advisors tend to be trained. They go through a training program, they learn stuff, they get licensing, different series 7 and 64, all the different things they
Mhm.
get, but that's just training. Do they read books? I wonder if they sit
Yeah.
down and read real life books, like
Yeah.
The Millionaire Next Door, a most basic example,
Yeah.
right, of this kind of stuff.
Yeah, are
The
they
Richest
reading
Man.
the Rick Edelmans, who is one of the
Yeah,
most
right.
successful financial planners ever? Do they read his stuff? I
Sure.
don't know. It's a great question, but
No, I don't
yeah.
know, right? So if you're an advisor and listen to this, and you're not reading some of these other kind of books, the Rick Edelman stuff's a great example, and not everyone agrees with everything that Rick Edelman talks about.
Mhm.
That being said, the stories that he shares
Mm.
and the real life examples of how people achieve wealth,
Mhm.
just through ordinary things, save X amount of money. The basics, right?
Yeah.
And they're really good and they're very powerful. And they'll help you with your clients, and they help you understand how also mortgage professionals can kind of blend into your
You
practice.
made a good point where as we get older, hopefully we get a little more humble and have more humility, right? It's not necessarily reading a book teaches you a bunch of new things. I find that it reminds me of a lot of things that I knew, but I kind of forgot about or hasn't been top of mind, right? So when you read a book, yeah, you're learning somebody else's failures and how they succeeded, and you can read in a weekend and fast forward a lot through your own career, but different ways to say something, right? Like just wow, I've never heard it said that way. Like I say that in general, but I never said it that way that the guy in the book
Yeah,
just said. It could be those little tweaks that all of a sudden turns the knob in your business just a little bit up. That's what I love about it. So when you go back to a book, right, you're different, John. We've talked about that. You're different when you
yeah,
go read a book you read 10 years ago,
absolutely.
and
Yeah,
the book's different because you're different. The book didn't really change, but it seems different.
yeah. No, absolutely. So anyway, that's right, and which kind of takes us back to the comment you made earlier. It's sort of being a teacher.
Mhm.
I think that anyone that talks to consumers about money and what to do with their money, how to spend money, how to protect money, all the elements of that, how to transfer money, right? You're in the seat of a teacher,
Yeah.
and it's important to have the heart of an educator and really understand that oftentimes our clients appear to know that they know stuff, and they don't, and then maybe they've had one experience,
Yeah.
and I bought a mutual fund and it went okay, right? So those kind of things, and just a reminder that
Yeah.
all of us
Yeah.
for financial professionals are teachers, and it's important to be teaching all the time,
Yep.
right? It's great.
Yep.
So love it. Going back to sort of the crossover between advisors and mortgage folks. You talked about transactional stuff, and you talked about if you were starting all over,
Mhm.
you would tell a mortgage LO to just focus entirely on the financial planning space, um, which is interesting because what you're really talking about is a long tail type of business, right? It takes time, it takes energy. Um, so, what would you tell an advisor that hasn't really been working with a professional like we're talking about? Where do they find someone like us? How do they identify that loan officer? You have any thoughts about maybe how they might find someone in the local market or where it might be?
It's a
And
great
how do you know someone like us?
it's a great question. And I here's my argument with that long tail, by the way, just real quick for my
Right?
mortgage people
No
that may ever
problem.
watch this, if they even watch it.
Yeah.
The reality is pursuing and trying to partner with a successful real estate agent, people spend months and months and months, if not years, on that.
Yeah.
So this whole idea of if you go meet with a financial advisor and you could click in that first meeting, like, wow, we share the same beliefs, and man, I
Hmm.
like you, you like me. You and I have both seen business being transacted in the first week. So
Okay. Good point. Yeah.
we have to
Yeah.
overcome some of that stigma that, oh, well, working with financial planners just takes longer. Not necessarily. That's just a belief system, from your
That's a
experience.
good point. Yeah.
You can beat your head against the
Yeah,
wall chasing a real estate agent who already has 5 of you and 100 other ones pursuing them, or figure out how to go be valuable to a financial planner, and you might be doing business together right away.
right. That's a great point.
Sorry,
Thank you.
side note, because that, like, gets me
No,
right
that's
to
no,
my
that's a valid point, and thanks for clarification. Thank
yeah.
you.
Um, what I'll give you my blunt answer first.
Yeah,
What I need to tell a financial advisor is that, and you and I are pretty highly trained on how we approach the client, right? And
yeah,
you're helping
sure.
clients directly, and I'm coaching other people nowadays to coach the clients. But my blunt version that I started saying was everything I do for clients makes you money as a financial advisor.
Mm.
There's my blunt version. Now I articulate it a little bit better usually if I'm sitting down for, 15, 30 minutes or
I think
whatever.
you articulated it perfectly.
That
I'm not
might
sure you have
start it. Maybe they
to.
lean in, maybe they say yes to lunch. I don't know, but it's just the truth, right? Like, and getting in my world, I'm getting mortgage advisors to realize this and connect the dots. Like every single time you sit down with a client and they just sold a house, they've got 400 grand and they're coming to you. And what do they want to do with all
Mhm.
400 grand? Put it all down. Why? Oh, I want the lowest payment, lowest interest rate. I
Yeah,
hate debt,
yeah,
all that. By the time they're done with me or someone who's trained like you and I are,
yeah.
they're walking out going, man, I want to put as little down as I can typically to at least be comfortable with my payment. And I
Mhm,
probably want to invest the rest, maybe take a little bit, pay off consumer debt. Maybe they put 200 grand down, they will invest 200. That's 200 grand of investable assets for a financial planner.
mhm.
You and I do that every day.
Absolutely.
When
Yeah.
we refinanced people, think how much money we freed up during 2020, 2021.
Mhm.
Refinance. Our whole industry did it.
Yeah.
How many mortgage people then right away got that refi client over to a financial planner to help put that money to work for them? I mean, let's not cry right
Yeah.
now,
We
but
don't know. Yeah.
it's horrible, and you and I know it.
Yeah.
It's
It's not a really high number,
no,
unfortunately.
no. I mean, there was so much wealth missed there because it
I
just
mean, billions and billions of dollars, to your point, billions and billions of dollars were freed up.
yeah,
And where did that money
yeah.
go? Right. That we,
Lifestyle
did,
inflation, man.
yeah.
Pushed our
Lifestyle.
economy forward, but it didn't go into
Yeah,
their
sure.
personal
Yeah. It helped the
economy, right?
economy. Yeah. But did
So
it grow
I
wealth?
think for a mortgage professional to go, we need the financial planners to realize, wow, these people's job, these mortgage professionals' job is to create cash and cash flow daily. Like now, the mortgage person has to think that way
Of
and
course.
reframe how they view their job, but that's how I do it. And that's what you and I are doing out there in the industry, trying to help mortgage professionals think this way and act this way. Everything we do, when they want a 15-year and they realize that maybe in their time of life, a 30-year might make more sense and filling up their buckets for college savings and maxing out retirement, financial planner, boom, bring them in. Like, I think they need to realize all of the things we're doing and be clearly shown that and realize, wow, you're not coming to me with your hand out for me to hand you business. You
Sure.
actually are doing things that creates potential wealth for every customer, and you need me. We need to work together. How do we work together? Like, let me bring you in. I have 401k,
Mhm,
admin
mhm.
accounts. Like, let me bring you in and educate the employees of this company because I can only talk about so many things. You can come in and talk about liability management. Holy cow, liability
Sure.
management is creating tons of opportunity to create wealth and financial security, and we do it in ways they don't always do it. So, yeah, I have so many things I would want a financial planner to think about us, but that's kind of at the end of the day. If they saw what we do every day, it would be quickly obvious why we need to work together.
Yeah, and the challenge is, I think that so if you're an advisor and you say, hey, this is kind of interesting, this is different than what I'm used to. The professional you may be working with today could be great at what they do. In fact, they probably are, or else you wouldn't be working with them. And sit down and chat with them. I mean,
Yeah.
maybe some of these ideas they've never thought you wanted to hear. And there are places to get additional training. We can talk about that before we wrap. But and if they're clearly a transactional type of loan officer,
Mhm,
mortgage, whatever you
mhm.
want to call them, there's probably someone in your marketplace that has designations. There are great designations in our industry
Yeah.
where people can learn different stuff and learn how to do it. I'm seeing mortgage LOs getting designations that are financial planning designations, RICP, and
Mm,
different things like that, just to
mhm.
improve their ability to work with financial professionals. So if only there was just a specific designation, Trevor, right? I'm not
CLA.
here. Yeah, just CLA.
Um,
And we're not here to talk about that specifically, but I mean, we would be remiss if we didn't mention what Todd Ballinger has put together, which I think
yeah,
is just fantastic.
it,
So
it's
why don't
the
you tell?
it's the CFP of the mortgage world. I mean,
Yeah,
that's how I always look at it.
yeah,
And the one thing is, I think I talked about one of our recent calls was in the CFP training. The one thing that isn't trained is liability management. I think
yeah,
that's fascinating. Actually, a financial advisor, my personal financial advisor, who is a CFP, knows what I do and my team does. And he's like, that's the one gap that the CFP has, and you guys do that to the highest level. So certified liability advisor, I mean, if I wave my magic wand, I'm sure you agree. That's what everybody in the mortgage industry should have
correct.
because it starts to get you thinking like a financial planner, talking like a financial planner, which becomes more valuable for the consumer. Um, if I can bridge these two questions real quick too,
Yeah,
another thought
sure.
I had to come in mind with what I believe financial planners need to know and maybe think
Hmm.
differently about us. And what I would want to say that it could be a challenge right now, maybe a blind spot in their business is maybe they do have somebody
Hmm.
right now, a lender, right, that they know, or maybe they work with occasionally. I think there's a big difference between a reactive type of
Yes.
partnership and a proactive partnership. And you are top of the game in this world. So I think we need to bring that up for any financial planners watching this. We are not talking about a relationship with a lender where you say, hey, whenever I know somebody who needs to borrow money, I will have them call you. That's what real estate agents do.
Hmm.
That is not proactive planning. We like to say, look, we should know before the consumer knows when they should borrow money or maybe even repay money. We should know that. We are the experts. So working with a mortgage professional that is trained to truly plan and project and avoid future mistakes sounds like a financial planner, right? When we say these things, like that's what they're paid to do. Most lenders then are just in this reactive relationship with that financial planner if they do have a relationship, and that's not the way to really build. That is just a transactional type of relationship where if your client comes along, think about this. Your
Hmm.
client as a financial planner comes to you and says, hey, I think maybe I should refinance. I heard rates might be lower. They've already done all the mental work.
Yeah,
They've
that's right.
already
Yeah.
spent all their time at home by themselves watching commercials, looking at Quicken ads,
Yeah,
like
yeah,
maybe I should refinance to finally get to the point where they call their financial planner. That is so late right now. You should be working with a mortgage professional who has tools, technology, systems, and people in place where we are reaching out to that consumer, their client, and saying, you know what, I think we have an opportunity here. Let's hop on a call for 15, 30 minutes and let's loop in your financial advisor and let's talk through if we have a chance to free up some cash flow to start to put to work with your financial advisor. That's how a partnership really works.
yeah.
And I think if more of them realize that is possible out there, they'd get pretty dang excited and want to know more.
I think you're spot on. I mean, I love the proactive versus reactive sort of viewpoint. And as the market goes through cycles, we have interest rate cycles, we have business cycles,
Mm.
and so forth. And we're probably going to go through another interesting cycle here in the latter half of 2022, 25, and 26, and even 27, right? And so the you, the vast majority of folks that have gotten mortgages in the last few years may have an opportunity to refinance, right? They may have taken on more debt. They may have become over leveraged. And understanding, this is another, I think, key point that a good mortgage professional can help a financial planner understand is sort of the blended cost of money. What is a household
Yes.
cost of money across mortgage, lines of credit, student loans, credit cards, car loans. I went to the dentist and I had to spend $12,000 on getting all new work, right? And I put it on a Care credit card, and it's 18.49%, right? And you don't realize these things, and so being proactive with, and this is to advisors now, being proactive with your own clients'
Mhm.
debts and their profile, I think is going to be really valuable here over the next couple of years. It's always valuable, but maybe more so in an environment where interest rates may become beneficial to someone being able to restructure debt, improve cash flow, add more money onto the asset side of the balance sheet, and grow their wealth and net
Yeah.
worth over time. And
So,
a good
yeah,
mortgage professional can help you.
John, I mean, you're again top of the game in this. So let's just talk about it. I know what you do and what I've learned to do, and I try to train others to do myself now. If a financial planner has a lender who just tries to refi the client, not in conjunction or partnership with their
Mhm.
financial planner,
That's fine. Yep.
there is risk there that they refinance their mortgage, their largest debt, their largest monthly obligation, in a way that maybe hinders the whole plan the financial planner has on track for them because
Absolutely.
they're not talking, they don't have a partnership. Whereas you're going to one, dive into the numbers with their client. You're going to look at the costs associated with the savings. You're going to do a break even analysis. You're going to make sure the client's not moving in a year and it takes 2 years to really
Recover. Yeah.
financially make sense to do this. Like just because we're going to save $200 or $500, but the break even's 5 years out, really the true financial break even, most lenders don't care about that. You, as a CLA, are looking into all of that. The second thing that happens is we are actually having the conversation with the consumer about what are we going to do with this $500 now?
Mhm.
Most lenders don't even talk about that. They don't really care. I mean, as sad as
Yeah.
that is, that's my mission I'm on right now. Like
Love it.
they don't care. They maybe would care if they saw a reason to care, but they're
Sure.
just not trained that way. So it's not like
Probably because they didn't ask the question,
you,
what's important to you?
yeah,
Like if I saved you $500 a
yeah,
month in cash flow, what would you do with it? Because they just
yeah,
assume, I'll buy sushi and shoes,
yeah.
right?
Which they
That's
will
all
if they
right.
don't have
They
another
will if
path,
they
right?
don't know there's something better.
Yeah, so when you're trained like you and your team are and our team is to look at it through that lens, that's the only lens we know to look at it now.
Yeah.
It is not just a transaction. So and we know that personal discipline sucks. We know that for most families if they have that extra $500 in their bank account at the end of the month, it is going to be infused into some other way. It just does by nature. So we have to be proactively discussing it with them, planning with them, and then bringing that financial planner back into the conversation. Literally sharing the mortgage code, sharing whatever tech you
Yep.
used,
Whatever tool you're
saying,
using.
"Hey, here's our plan. We are closing at the end of the month. We're going to free up. It looks like about $500, give or take a few. Once it's done, I'll get you the final breakdown, and then we want you two to schedule time to put that money to work for their future." I mean,
Yeah.
that should be a financial advisor's dream.
Absolutely.
And if they're allowing their clients to work with somebody who doesn't approach it that way, I think that's a huge miss, huge failure,
Yeah.
because
Yeah.
it's going to jeopardize their business and their ability to create wealth for that client. And we know that the only way a financial planner makes more money for their own family is to help their clients make more money
Yeah.
for their families. Like that's a great model right there. I love the heck out of that model.
Well said, Trevor. Thank you. And I'm just going to add one little thing to it because one of the things that I share with these advisors we work with is that we are a non-competing professional.
Mm,
And what does that mean? A non-competing professional. So there's a lot of different lenders in the world, right? But non-competing professional means I don't do anything that you do other than help people, educate them, help them understand where money can go, where it can flow, how it can work within their life. But I don't do investments. I don't sell insurance. I don't do estate
mm,
planning.
mm,
There are lenders, lots of lenders, large institutional lenders who have divisions that do all those things,
mm,
right? And I will also say, if you're an advisor and you're allowing your clients to go off to those lenders that have a wealth management arm or a different division that wants to do financial planning, they will eventually get that in front of that client. No matter how much they love you, at some point they're going to make them an offer.
yep.
And that doesn't mean they'll go there, but they might, right? And so just think about that in your own practice and how important it is. So
Such
that's
a
just my
huge
add
point,
on there.
man. That is such a good point. I'm glad you put that in there.
So thank you. Well, we've been going. We could probably talk all day long,
We could. This is a fun topic.
as we do a couple times a week.
Yeah, right.
But we're going to wrap. And thank you. All these notes and a few things we've referenced is the Certified Liability Advisor designation. We'll have in the notes, and so you can get links to it all at some
Great.
point. But thank you for your time. And before we go, Trevor, I want to give you the opportunity to close us out, just with anything that you're thinking about today. What's words of advice to family, friends? It doesn't really matter. Anything that you think is going to make the world a better place.
Oh my goodness. Well, okay, since this is typically designed for financial planning community, my audience is the mortgage community, and I think this conversation we just had could really create some new thought for my mortgage friends all over the place, regardless of what jersey they wear.
Sure.
My message is going to be to them. My advice is it's been a challenging few years, and we all know it in our industry, right, that we're in. But I think right now, too many people are telling themselves that story. They are telling them, man, it's hard out there. My real estate agents don't have any business. I need better pricing. They're telling themselves all these stories. I think right now it's time to stop telling yourself that story as a mortgage professional. And it's also time to reimagine the entire future of your business. I truly think that. Everything up to today has been preseason.
Mm-hmm.
That's it. Everything you've learned over your last 5, 10, 27 years, it's been preseason, right? It's preseason. Tomorrow, the real season starts. Reimagine your business right now. Who do you want to work with per our conversation? What types of partners would you like to be aligned with? What kind of clients are you working with? Who are you no longer working with? So not just how much money I want to make and how many loans I want to close. It's really like, what are my clients saying about me after the experience? How much time off am I taking with my family and myself? What are my morning routines? I think right now, a lot of people in my industry and your industry need a reset because they're telling themselves the wrong story. And there's so much flipping opportunity in this market right now, no matter where the rates are or what company you're at. It's amazing out there. And we need to get that out to more people because they've got their heads down. They're frowning too much. And man, I see people winning like crazy right now in this industry. And we talked about a great path for them to build a whole new future today. Bam.
Love it.
There's my advice
Thank
to my
you.
mortgage friends out there.
Well said, Trevor. I appreciate your time.
Thank
We'll do
you.
this again soon.
Yeah, happy to help. This was great. I love what you're doing.
And add hot yoga in. Have you done hot yoga?
I have not. I'm not. I'm not there yet, man. I'm not there. I'm like 8 weeks in.
Hot yoga is so awesome. Anyway, okay.
It's pretty hot upstairs in my home office.
All right. Thanks again.
We'll talk. All right. Thanks, John.